The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. So what do we have today? Well, just the opposite of yesterday, maybe just a little less of the opposite of yesterday. We're up 21 points on the S&P cash volume at 2 billion shares. I think we came in with 2.2 or so billion shares yesterday, so we're a little lighter than yesterday. What we've done is go up to the resistance level, and we'll see how that works out. Probably the most important one are those SMHs. That $84 line has been the line in the sand. They tried to breach it, tried to go up to 84.12 today. It's at, 83.89. That and the way that closes is probably going to be the most important signal we'll get by the end of the day. We'll talk more about that. But, we've got a few things going on out here. Market's fairly weak, and we can talk about the reasons why as we venture on into another wonderful program. In the meantime, I always like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
So as I said, big bounce out here off those lows. We're going to go through a bunch of double repo patterns today that I had in my newsletter this morning, and kind of show you how you kind of look at that pattern, because it's been one that's been developing for a very long time. We've been waiting for it, and pretty much the way you need to look at it. But we're kind of at those levels now. We'll see before the end of the day. Some people believe that we're rallying on the idea that the Senate will actually get something done. My guess is we'll start probably tomorrow. There'll be it'll start leaking out that all the senators are calling for first-class flights back to their districts and their states, and that will be the end of that. We won't have any more talk of a health care bill before next week. And then, of course, probably right back down to where we started. Any close below in the next couple of days, 24.33, that's kind of the magic number I'm looking at. Any close back below then, and we should have many more days as we had yesterday. But we're kind of, I don't think it gets any closer to falling one way or the other in a coin flip out here. If you're long, probably stay long. If you're short, you can probably stay short. If you did it right, if you got in right on Monday, most of my positions, I guess, are still on the positive side of the fence. And a couple of them aren't, but a couple of them are doing well. So I'm not going to say that this has been a bad week yet. It's bears make money, bulls make money, and pigs get slaughtered. I'm not one to marry the short position going into a 3-day weekend, but my thought was the most bullish thing and what would turn me into a bull is go testing yesterday's low on lighter volume and then heading back up. Just another push to the higher level today doesn't do a whole lot for me. We'll look at some of the other markets out here, but even things like the IBB, the IBB and others that are up today, I think these give you some real good opportunities to go after this market if we do get one more signal of lower prices coming. In the meantime, we always like to start off with a little bit of history.
And it's all just a little bit of history repeating.
On this day in 1990, at the Palace of Versailles, I used to drive through a town called Versailles all the time. It was Versailles. Palace of Versailles outside Paris, Germany signs the Treaty of Versailles with the Allies, officially ending World War I. And the English economic dude, John Maynard Keynes, who's rather famous for being famous and being at least somebody that wasn't 100% wrong as an economist. He was only like 90% wrong. So became kind of famous for that, not being 100% wrong. He had attended these peace conferences, but then left in protest, saying one of the most outspoken critics of the punitive agreement, the economic consequences of peace, he wrote in 1919, predicted that the stiff war, reparations, and other harsh terms imposed on Germany by the treaty would lead to the financial collapse of the country, which would in turn have serious economic and political repercussions on Europe and the world. And of course, we get to 1945 and 1946, and they finally heeded Mr. John Maynard Keynes' advice and did the Marshall Act. And I think we had much better results. No more 70 million dead from a third World War. Probably actually, I think the first World War was like 25 million dead. Then we had 70 million dead. So you figure that you continue going like that, the next one's 1 billion. So probably a good policy not to leave people in a position that only means that they come back after you as soon as they get back on their feet, or in this case, fall off your feet. But on this day in 1919, somebody had an idea. No one would listen. Nothing's new. Sometimes it takes a few times before anybody can figure anything out. Anyway, on this day in 1919, as I said, we're going to get to charts fairly quickly. Wanted to start looking at some like Tesla. We talked about these 3x3 patterns for a while. The double repo pattern from Joe DiNapoli. I've always liked it better than the parabolic SAR and some of these others. The 3x3 is the key to using this. This is a 3-day average moved 3 days into the future. And by doing that, you actually get a line that goes out here and tells you what you're looking for in the way of either closes above or below that line. As long as it stays within this, it's kind of like a Bollinger Band that way. As long as it stays back below the line, that generally shows you the trend. The pattern is 10 to 15 or more days higher above the 3x3. A couple closes below it, a couple closes above it. The next close below it is the signal that the thing's ready to pull the ripcord and take a header lower. So keep an eye on that. Let's get back up here where I can get my get to my line. Anyway, 2441 on the S&P cash. Volume just kicked over about 2 billion shares. Volume was fairly good in the morning. By 11:30, it had gone light. So we had a lot of volume, people down there. I'm wondering if a lot of people didn't decide to short the bounce and then probably get squeezed out of the bounce here throughout the day. And then maybe we see the true news of the Senate coming back tomorrow. And then we go right back to what we had yesterday, which is, well, no health care bill, no tax bill. So we head back down low. I'm not exactly sure that's the reason why. We will talk about what I do think the reason is that we moved lower yesterday, because it pretty much happened at the same time. We'll be back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we are back. We're going to go look at what's happening here. You can always give me a call at 877-927-6648. You can also email me at path@tfnn.com or put a message in the den, and we will look at it. But for the most part, I'm going to try to go through a bunch of these 3x3s so you can start looking about what I look at in these. What you want to see, of course, is the 10 days. And if you don't have the 3x3, you can use a 9-day moving average. That one's it's a little smoother. And this one actually has a little better look to it. Didn't really get a close below on the 9-day on Tesla, but you can get the idea out there between using one or the other one. You got a couple of days in this one. You got the move down. What you want it to do is just kind of stay below this line. There are others that I like better, and why I am not short Tesla in this pattern. AFAM. So here's a good example. Almost family. Don't know much about this stock, but you do get these big long runs above the 3x3 9-day moving average. Then in this case, on the 16th of AFAM, you get the close below it. You get another day close below it. You almost close above it on the 20th of June, and then you get 3 or 4 or 5 days. Then you get that thrusting action to the downside of that line. What you do, of course, hopefully, is you can get as close to that number as you can to pull the trigger on the short. And then, as long as it stays below that line, that is the guiding, to some extent, the guiding line for this coming down. Normally, they will stay well underneath that line as they reverse the big parabolic move that drove them up there to begin with. Another one that gives you a good indication out here, the same kind of thing, is Alaska Air Group. This one's been closing above the 3x3 since the 19th of May. You get into the 12th of June, closes underneath it for 5 days. You get 1, 2, 3, 4, 5, 6 days out here with a spike to higher volume without that, a spike to lower volume of the previous highs. And then the next thing, boom, you get the close underneath it. Again, these things can kind of bounce and you're going to get some resistance. Everybody's going to try to go back and buy it again. Key is to stay underneath it. So these things can give you very low stops in the way of getting in and out of some of these. You know fairly quickly if they're not going to work. AMEDSYS, AMED is another one out here. This one's probably not one of the better looking ones, but you can get an idea that the pattern is kind of this move up without really any decent pullbacks. You get 10, 15 days. You get a couple of days underneath it. It pops back up, and then you get this huge candle down that goes and drives right underneath it. Basically, you just have to stay under that line. If you go back over it, you have to really evaluate if something else is going on. Again, in benchmark electronics, what do you get? You start out here on the 23rd of May. You continue all the way to the 14th of June above this moving average. You get 1, 2, 3, 4, 5, 6 days below it. You then have a big day above it. Another one on the 26th of June. And then, of course, is that June or July? May. No, that's the 6th, right? Yeah, we're going into July. So the 26th, this goes above it. And then, boom, right back underneath it. Now, this one is kind of fighting to get back above that line. You'd know fairly quickly that you basically are looking for this thing to have lighter volume and stay under that line. So this one looks like a little chance more of that one stopping you out. Cambridge Corporation, CBM. It used to be Commodore Business Machines. Same kind of thing. You go above this one on the 24th of May. You go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 15 days above it, you get 2 days below it, 1, 2, 3, 4, 5 days above it, and then you come down. Now, this candle is not as big as the rest, but you kind of just keep an eye on this thing and make sure that 3x3 continues to slow back down. But normally when these things fail and you get that candle as they break underneath that for the second time, then that opens up where the thing started all over again. In this case, this one's about $53. So not bad, $59 to $53. CNMD. This one was a big ripper out here from back to March 13th. Now this one's a little bit more subtle. The same kind of thing. You get the close underneath it. Of course, yesterday, it goes down, volume picks up. This is not a high volume stock. But again, all you want to do is make sure that you can stay within that. And when you set up your trade, you kind of know already, just by looking at the line on the 3x3, what you want to stay under. Again, you can call me at 877-927-6648. I'll be glad to it. Hecla trading halt. Okay. Gramercy property. Here's another good one. You start off on this one with a big sign of strength back on the 17th of May. You continue all the way up to the 14th of June, where you close under the 3x3 on the 15th. You get 1, 2, 3, 4, 5 days. Go back above it. You get 2 days above it, and then slam down back underneath it again. And then, of course, a gap down today. But again, you kind of, this one, instead of having kind of a stop, you kind of are looking at an arch that will continue to develop back down. In this case, you're looking for it to come back into the first candle where it took off above the 3x3. That would be the 17th of May. What's the high of the day there? $28.62. The low of the day was $27.42. So what are you looking at? About $28. You kind of look about halfway in the middle of that, and that's where you can set a target. So, yeah, this one's not that much juice in it. ICLR, excuse me, icon. Let's get this back here a little bit. This thing takes off above the 3x3 back on the 27th of April. Pretty much gets a couple of days underneath there, but then this thing can get a little noisy. But this on the pattern you're looking for, you want 10 to 15 days, and you really do have it starting on the 19th. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. You get 15 days above it, really to speak of, and then a couple of days below it, you get kind of a little sign of weakness, a pop back above it. Now this one, you need a solid close back below it. But looking kind of interesting on this one. If you get it in the next couple of days, the next little decent close underneath this with a kind of sign of weakness, a nice candle would set up the signal that you indeed are ready to go back to this beginning, which is the April 27th.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Will interest rates continue to rise? For bold trades on U.S. Treasuries, now may be time to take a closer look. Trade TMF or TMV, Directions Daily 20-plus year bull and bear 3 times ETFs, direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we had a question about the SMHs, so this is a good example out here. For the most part, you stayed above the 3x3 in the SMHs back from April 19th all the way to where this thing fell apart on 6/9. Of course, you stayed a few days underneath it. You popped back above it. You gapped a little higher, which is kind of what I was looking at on Monday when I started putting the shorts on, and that was everything's starting to fade out here. Of course, yesterday you gapped down fairly hard. You come back a little bit, but yesterday you were down on 7.6 million shares. You're up today on 3 million shares. Again, as long as you can stay, just on reading the tape below 84, I think you got this thing made. Could it go just a little higher than that and you could still hold in the trade? It could. All you want to do is make sure that you stay in the 3x3. If you have the art of timing trade charts, all you have to do is actually click on there on the little days on the 3x3 line. It'll pop it up. 85.44 is actually the high that still keeps that double repo pattern going for tomorrow. So then you get into the next day after that, it's 84.64. And then, of course, we get into the day after that, and that's 84.05. So this thing has to continue to move lower over the next 3 days to stay under that, but you already know those numbers today. You don't have to wait and say, okay, what did the moving average say? You already know the numbers. So this thing does need to stay below that area as we go through there. We came a couple of points off the high of days. What are we, 3.5 points off the high of the day on the S&P cash. It's 2439.5. Like I said, volume has really shut off from around noon or so, and maybe a little bit before noon. But when we were down lower, this kind of looks like a short squeeze on a lot of people that maybe shorted the open and kind of got ran the other way. The volume has not been that good, like I said, since about noon. Just 2.16 billion shares so far on this pop compared to some serious volume down yesterday. Like you can see in the SMHs, 7.6 million shares to just 3 million shares so far. Okay, yeah. SAP, take a quick look at this one. Even though this is an ADR and it's kind of a little bouncy, you get kind of the same thing, and that's a nice bounce going back to April 24th to set up this pattern. It continues going and staying above the 3x3 until you get to the 6th of June, where you close underneath it for a handful of days. You go back above it. So yesterday you get it. Volume's okay, 550,000 shares. Today you got about that same. But again, these are how these kind of tops out of these parabolic moves sometimes happen. They don't all just fall apart. They just kind of stay underneath this curve as it continues to arc lower. In this case, you'd look at SAP coming back down to about 97 bucks. Okay, to SNN, which is Smith and Nephew, SNN. I think it's an SSN, that's a submarine, right? So SNN. The same kind of thing. This thing really has been staying above the 3x3 since, what is that, April 5th. And you basically spiked out here on June 7th, started close below it for a few days. You close back above it on the 16th. You go get into Monday's candle where this thing just hit the 3x3 and closed at it. You get the close underneath it yesterday. You get the pop today, and this is what you want to start looking at. 465,000 shares yesterday, and you got 240,000 today. If you want to start seeing that relationship, for the most part, hangs in there, which is strong down days, light up days, and stays underneath the 3x3 as this thing goes back to where it started from. This one is the kind that I don't like for 3x3 patterns, and those are ones that go to significant new highs. For me, this kind of negates this pattern, but what I wanted to show out here is that if you just follow the straight rules of the road, it could be called a double repo pattern from Joe DiNapoli, but you really don't want it far exceeding the previous highs out here, so it would negate it. We talked about Tesla before. This one is a fairly decent pattern out here, but you could look at this thing as wanting one more test and then yet one more failure. And as short as that is, I would not be surprised that you get that. 2440 on the S&P cash. Okay, so now we go to Viva Systems, VEEV. Very much the pattern you like to see on here. Going back to the 19th of April, this has been above the 3x3. It stayed so right into the 7th of June, closed down fairly hard the next day, the next couple of days, finally gets above it. Of course, yesterday you plowed below it. Volume increases from the day before, and not that much, 100,000 shares. But now all you need to do is make sure that you stay below that break line, and gives you some fairly narrow parameters for putting a trade on. Workday is another one out here. Again, you can give me a call at 877-927-6648 or send me an email at path@tfnn.com. Workday, another one, as I said on this one, that I was hoping coming back to the day this thing started, which was April 12th, that would be $83.45. This made a high, tested it on nothing for volume. So you've got the nice high out here. This one's kind of the one that puts it all together. 104.53 on June 2nd with 5.2 million shares. You get into it with 1.4 million shares on June 26th. The close below the 3x3, but everything you like. And you just have to see where the thing really kind of starts. Now you can say one or two things. It either started at $90 or back here at $84. But this pattern really only had a couple of days below it and then got negated. So I would look for this thing back to $85. Well, is that 85? What is that? What was the close there? 83.45, which it has that. You could also bottom out at 90. I do like this stock, but pretty good indication out here that this thing did double top at 104. It's closed below the 3x3. Even if you start out here at the most charitable case, you're looking at the close at $90.89. So still have another $6 or $7 to go lower out here. Even if it held out there, maybe that is the area that consolidates at. You get a chance to buy it. Okay, what do we have here? A couple of people wanted me to look at IWM. IWM is going to be the last one out here to fall. It is not uncommon to see that. He had a pop today, volume so far, 17.9 million shares compared to 24.6 million shares to the downside yesterday. This thing has not really closed below it, but you've got some signals out here that this thing is just the last place to hang your cash in for the rest of the markets turn south. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we'll take a look at Yum Brands. Now, this one's I really kind of like out here for these big patterns, and that is it's got a double gap on Yum at about, what is that, 67 bucks. That was the low of the day out there, 66.92. So that's kind of my target out here if this thing did turn bearish. You basically had this thing since about the 19th of April in a bullish move all the way until it closed on the 8th of June. You had a few days below the 3x3, 6 or 7 days above it. You closed below it solidly yesterday. Volume picked up. Volume so far fairly light. So if you get into the end of this day, you've got a pretty good place to put your short up against this trend line, which is only 20, 30 cents higher right here. As long as it continues to stay below that line, you've got a pretty good short position on it. And you have a fairly good idea where your target's going to be, which is 67 bucks. So, what is that? $7 or so. I think I would probably wait to next week, and this one might be a very good candidate for putting on a put when we come back on Wednesday. What else? I'm going to look at a few other stocks, get to some other things out here. See these other ones out here. Wanted to see how a handful of these were actually working out today. Toll Brothers at highs and no volume. Wanted to see the May 23rd spike at $39.37, 5.2 million shares. Today we just have 900,000 shares. So we continue to see a lot of these 52-week highs or retests of the highs on very light volume. In this case, 1/5 of the volume. So you want to start kind of messing around in that sector. And the reason I say that is you start looking at other stocks that trade with housing. Semper Sealy International, we talked about this one being up here again, up into the spike on May 4th that had 3 million shares. In the last 3 days, we've had 1.6 million shares. Yesterday, 822,000 shares. Today, just 400,000 shares. So no confirmation in that housing sector, but looks like maybe when we come back next week, that may be another sector out here to start looking at highs in it. Restaurants, Texas Roadhouse is seeing 1.5 million shares at 51.79 on May 3rd. You got into it, went over it by 7 cents with 1 million shares, so volume shrank by a third. And then, of course, you spiked it yesterday with 850,000 shares. Today, just 233,000 shares. So some of these things are really kind of pushing these highs without much juice behind it. Ulta, ULTA, has already turned over. Was watching how this got back into the low of May 24th, 277.68. We got to 280.33. So we're still about $3 or $4 above that May 24th low, but not bad. 2 million shares there. Today we've got about 375,000 shares. This has been one of the big Mac daddies for a while. So if the market's headed higher, that one may be something to keep an eye out on. What else do we have? Vivo, VIVO. This is Meridian Bioscience. Like this one, if it was a higher price stock to short, it's just too inexpensive. But goes back to my looking at the IBB maybe today as a setup for finally pulling the short on it, or maybe in the next couple of days we'll look at the IBB next. But down on heavy volume on the first, on January 25th of this year, down with 3.9 million shares. Back into it with 700,000 shares on April 27th. Today we're up with 134,000 shares so far. So you're filling this gap. There's not much to it. Let's take a look at the IBB real quickly. Okay. What do we have here? Okay. Again, we thought this area right up here with the double repo pattern was the place to put the short on if you were thinking about it. I just thought that we're better looking charts out here to be short. Again, this one, I had really kind of a run of about 4 days. You came down yesterday with 1.88 million shares. Today you're up at let's call it 1.2 million shares so far. Don't see a lot in this one other than another test of about 320 on this thing with light volume would be probably everything you'd want. My guess is you're not going to get that opportunity. You may get a little higher prices into Friday, and I mean by little, but I mean $1 or $2. But that looks like that is shorting up for the head fake for this thing to come right back in after it had been kind of, consolidating and narrowing price ranges for a while. Got somebody asking me about GLD. That was the same thing. I didn't see a lot in it, in that it just continued to look like narrowing prices in it. What do we have today? 3.3 million shares compared to 5.8 million shares yesterday, compared to 6.5 million shares before. Again, there's just not a lot to hang your head on it. My guess is that this will start moving with the market, but probably not this week. And the question is, do you want to go in owning gold this weekend or crude this weekend? And looked to me like crude actually started moving a little bit. It's up 51 cents. Looks to me like this thing wants to park at about $45, probably going into the weekend. After the news today, and up a bit, but not all that exciting. And of course, 3 cents up on natural gas, gold up $2.80. This 1250 area on the metal itself seems to be kind of the magnet that this thing is honing in on. Again, I suspect that what you're going to have is some big breakaway, and whether it's up or down, that first breakaway is going to be a head fake, as many other things have been in here. Got a question to take a look at IBM quickly. So I guess it wasn't quickly, just look at it, which we will do. Still don't see anything in IBM out here. We are going to start having we're going to have a webinar for my subscribers, and you'll be able to get a 30-day test of my newsletter. We're going to do that, I think, the third week of July. I think it'll be announced here fairly soon. But we're going to talk about all these companies. Of course, IBM has decided to go whole hog into Watson. And we're going to talk a great deal about how to trade these stocks and the difference between all these different machine learning companies. But we'll be doing that webinar, I think, the third week of July. we'll announce that fairly soon. But it's going to be interesting. I just don't see a lot in IBM right now. We'll talk about this when we come back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And yes, indeedy duty, you do have Amazon kind of making that same 3x3 double repo pattern. It did close significantly lower. Yesterday, volume was 3.8 million shares. You're up on 3 million shares today. So this is, again, is probably one of the stronger ones. But again, you would think that this would have pushed up a bit higher than it did today. But kind of interesting. Let's take a look at Fake Book real quick. On this one, you've been kind of trying to push above this 154 level. It's been acting as fairly decent resistance levels. I don't see a good one on this just because it's only going to come back to 142 if it does fail. So I like some other ones, but it does seem like it's on a sell signal. If you were thinking long on this one, I suspect that 142 level is where you want to start taking a look at it. NFLX. NFLX. Okay, now this one, you got a fairly decent sell signal yesterday. You had 7.4 million shares to the downside. Today you're up on 4.4 million shares. Again, as long as these things kind of hang around think that they're going to go back to these breakout levels. In this case, is 145. It's only $5 down on Netflix, so I wouldn't be chasing it after it's already fallen apart. But most of these big leaders out here have had some issues, and none of them look like buys just yet. Might find that next week. I just don't see that much of them. Microsoft also, of course, went underneath yesterday with 25.2 million shares, up today on 17.7 million shares. Can you get close? You can. But my guess is that the $66.50 actually is the next place that this is going. So we can keep an eye on that. What else do we have? NTES. I want to watch this guy out here. This one has been kind of quietly one of the bigger stocks in tech. Just continued to go up. You had a nice run up here. Again, this one's underneath it. You don't have any clear signals on that one so far. And did we look at Apple yet today? Everybody's been leaning on Apple this morning to try to get this market up. It, too, also is still under 3x3. So there is no buy signal. But this is kind of, if you're playing these stocks, you're trading a little bit more. You know, if you can get right at that price and then put your stop on the other side as long as it closes above it, not intraday. But you have to say, okay, you know, we're right at it. There's not a better chance to short it. I think there's better risk reward out there, but literally this may be a good way for you at home to go out here and look at this. But as long as it stays underneath this line, it continues to be on a sell signal. And you really want a test of 142.20, which is the June 16th low. My guess is that we're going to get it. Today's bounce on 17 million shares compared to 25 million shares to the downside yesterday kind of tells you everything that you need to know. And that is that Apple is still weak out here. And, of course, with it being some 12 to 15% of the NASDAQ 100, what are you going to do? Well, at best, you're going to do nothing. So we looked at Microsoft. We look at all the rest of the FANG stocks. Can I really think that there's anything else out here to look at? No, it's all about the close today. Can we sell off into it? Can the SMHs hold above 84 into the close? I think we're going to get a taste of just the next few days. I don't think that come next week we're going to be any higher than this 2440. I think that's about it. But in the meantime, get the opportunity to sell when you can, not when you have to. And we will see you here tomorrow. Bright, shiny, and another trading day.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.